We are from Group 7. We have chosen Mfrs 141 Biological Asset as our accounting standard for our assignment.
I am Ling Ming Hui. My metric number is 301395. I would like to introduce about biological asset which under Mfrs 141. Mfrs 141 is an accounting standard that focuses on the recognition, measurement, and the disclosure of the biological asset and agricultural produce. It is applicable to the activities involving biological transformation, where growth, regeneration, production, and procreation take place. Biological asset refers to the living plants and the living animals. Red wines, tea bushes, and the sugarcane are the example for the living plants in a biological asset, while for the property like chicken, duck, cattle, and the sheep are the example for the living animals in a biological asset. Well, agricultural produce refers to the harvested product from the biological asset. For example, latex that has been extracted from the rubber tree, eggs and milks, and the tea leaf that has been plucked, and the wool that has been extracted from the sheep. Not only that, the sugar cane that has been harvested, and the grains and the grapes that has been plucked. It are the example for the agricultural produce. Both biological asset and agricultural produce are measured at the fair value less cost to sell. Why we use fair value? Fair value will reflect for the continuous changes in the value due to the growth or production. The changes in the fair value will recognize in the profit or loss. If the fair value cannot reliably measure, then the cost minus the cost less accumulated depreciation or impairment is allowed. Lastly, it is about the disclosure requirements. The entities are required to disclose the types of biological assets they own. Besides that, the methods and the assumptions used in determining the fair value. Next is the impact of fair value change on the profit or loss. Not only that, additional info such as physical quantity and agricultural risks such as disease and the climate are encouraged to disclose in the financial statement. Here is all about my part. I will pass to my friend.
Alright, now I am student Shafika binti Kamaruddin. My metric number is 301205. I will briefly explain the three key theories that help us understand why and how Mfrs 141, which is biological asset, was developed. First, agency theory. Agency theory highlights the conflict of interest between shareholders and managers, especially in agricultural businesses, where biological assets are difficult to monitor and constantly changing in value. Before Mfrs 141, managers had greater discretion to manipulate asset value or delay recognizing losses. Mfrs 141 reduced this information asymmetry by requiring fair value measurement, which provides more transparent and up-to-date information. This helps reduce monitoring costs and limits opportunistic behavior, ensuring that management acts in the best interest of shareholders. Second is positive accounting theory, which is BAT, explains how managers choose accounting methods based on incentives such as bonuses, debt covenants, or political pressure. Under the historical cost method previously used in agriculture, profit figures were more stable. This stability allows managers to smooth earnings, such as delaying harvest or adjusting valuation timing. In response to this behavior, standard setters introduced Mfrs 141 to reduce earnings management and ensure reporting reflect economic reality rather than managerial incentive. Although some firms resisted the change due to increased profit volatility, BAT helps explain why fair value reporting was necessary for transparency and comparability. Third is regulatory theory. Regulatory theory views accounting standards as mechanism to control and guide corporate reporting behavior. In agriculture, inconsistent methods and outdated historical cost reporting created confusion, and poor comparability for users. To address these market failures, regulators such as IASB and MASB introduced MFRS 141, mandating fair value as a consistent measurement basis. This regulatory intervention ensures more reliable, relevant, and comparable information, ultimately improving users' decision making. In summary, agency theory explains the need to reduce information asymmetry. Second, PAT highlight how managerial incentive influence accounting choices. And third is regulatory theory shows why formal rules were necessary to standardize reporting. Together, this theory explains the motivation behind the formulation of MFRS 141.
Hi, my name is Muhammad Ahmaduddin bin Madin and my matric number is 301330. So I will be presenting about the main parties involved in development. So the first one is the International Accounting Standard Board, IASB, global body that created IAS 41 agriculture, established principles for accounting biological asset and agricultural produce at fair value less cost to sell. 2040 amendment barrier plan moved to IAS 16 cost model, while other biological asset remaining at fair value. Basis formulation MFRS 141 under IFRS convergence. The second one is Malaysian Accounting Standard Board, MASB, national standard setter that adopted IAS 41 into MFRS 141. Issued in 2011, MFRS framework effective 1 January 2012. Transaction for agricultural entities deferred until 1 January 2018. Aligns with IFRS 15 and barrier plan amendment. Conduct exposure draft, public consultation and review to adapt standard to local law. So the third point is Financial Reporting Foundation, FRF. Oversight body for MASB, ensure due process transparency and accountability in standard setting. Ratify MASB framework and protect the integrity of financial reporting in Malaysia. The fourth point is professional accounting bodies such as MIA and MICPA. Provide technical expertise during exposure draft phase, offer practical input on issues like fair value measurement of biological asset. Guide auditor and accountant in applying MFRS 141 effectively. So the next point is agriculture industry stakeholder. Includes plantation companies, agribusiness firm, auditors and analysis. Feedback on practical issues like impairment of immature of biological asset, volatility in fair value estimates, disclosure burden. Their input influenced the deferral of implementation 2015 until 2018. The last point is the government agency and regulators such as SC, BNM and SSM. The government agency review draft standard for consistency with national regulatory framework, focus on capital market stability and investor confidence, enforce standard under the Financial Reporting Act 1997, ensure smooth integration of MFRS 141 with regulatory oversight. That's all from me. Thank you.
So hello, my matric number is 301236. So today I will explain about MFRS 141 agriculture. The standard is principles based. That means it does not give strict rules for every plant or animal. Instead, it provides broad guidance and focuses on fair value. Accountants are expected to use their own judgment and professional skills when valuing the biological assets. So the central concept here is fair value. Companies need to adjust their valuation methods to match current market conditions and the type of biological asset. So this shows that the standard is flexible and realistic. Researchers Kadri, Amin and Bakar in 2023 studied this in Malaysia. They found that When companies report biological assets using the fair value, it shows both the value and the type of asset. So, this supports the idea that MFRS 141 is principle-based because it relies on ideas and professional judgment rather than the fixed formulas. So next, another study by Wanatzer and Co. looked at the government agencies. They also follow MFRS 141 by revaluing the biological assets like trees using the fair value. Agencies change their procedures depending on the circumstances of the assets, and this shows that the standard encourage the professional valuation and the strict rules. A real example is Samdarville Plantation Berhad. In its annual report, Samdarville values all palm trees based on the price of crude palm oil and the expected yield of fresh fruit bunches. So there is no single formula, and the company applies expertise and fair value principles. So this demonstrates how MFRS 141 works in practice, which is linking accounting with real market conditions. And it is also important to note some key points. So there is 3 key points, which is for the first one, the standard increases transparency because fair value reflects the current market situation. For the second, it improves comparability across the companies since assets are valued using market-based measures. And for the third, it highlights risk and volatility because biological assets like crops and livestock can change value quickly. So overall, MFRS 141 agriculture is principle-based because it relies on fair value, allows professional judgment, and does not provide a full list of rules for every biological assets. And it promotes transparency, comparability, and flexibility in reporting, which is very important in agriculture where market prices and conditions changes all the time. So that's all from me. Thank you.
Hi, my name is Asma Aisyah binti Azanwa Yusri. My metric number 301272. Now, I am about to presenting limitation of MFRS 141. So the first limitation of MFRS 141 is high volatility in profit due to fair value measurement. One major limitation of MFRS 141 is that it introduced a significant volatility into financial statement because biological asset must be measured at fair value less cost to sell. Since the value of biological asset often fluctuate due to market prices, weather condition, disease, or change in growth cycles, this can result in large unrealized gains or loss from one period to another period. As a consequence, reported profit become less stable and may not accurately reflect the underlying performance of the entity's agricultural operations, making long-term comparison more difficult. So the second limitation of MFRS 141 is difficulty and subjectivity in determining fair value. Another limitation is the practical difficulty in determining a reliable fair value, especially when active market for certain biological assets do not exist. Many agricultural activity involve unique or location-specific assets such as plantation, rare livestock breeds, or aquaculture product may not have readily observable market prices. As a result, companies are forced to rely heavily on assumption, estimation techniques, and valuation models. This introduces a high degree of subjectivity, increasing the risk of inaccurate valuation and reducing the reliability and verifiability of the financial information presented. The last limitation of MFRS 141 is high cost and complexity of implementation. MFRS 141 also poses a challenge because of the cost and complexity involved in applying fair value accounting. Tracking biological transformation requires frequent measurement and detailed data collection, such as monitoring growth stage, mortality rates, and quality changes. Many agricultural companies, especially small or run farms may lack the technical expertise or resources to carry out such sophisticated valuations. Hiring professional valuer or implementing specialized system can be costly and time-consuming. This makes complying burdensome and may overweight the benefit of fair value reporting for certain agricultural enterprise.
Hi, my name is Farid Ikmal bin Kamaruzaman, my metric number 301417. Today I will presenting the suggestion to overcome the limitation of MFRS 141. There are three key recommendations. The first one is to strengthen fair value measurement guidelines and disclosure requirement. The second one is to allow additional disclosure for internally generated biological enhancements. And lastly, the third suggestion is to reduce earnings volatility through improved presentation and clearer classification of fair value changes. So the first point is strengthen fair value measurement guidelines and disclosure requirement. Strengthen MFRS 141 require introducing standardized valuation guidelines to reduce subjectivity, enhancing disclosure requirements to improve transparency, and improving consistency in reporting to increase comparability and reduce earning management risk. This means that clearer valuation method and better disclosure practices would help ensure fair value measurement are more reliable, easier to understand, and harder to manipulate, allowing users to compare companies more confidently under MFRS 141. And then the second point is permit additional disclosure for biological enhancement produced internally. Since MFRS 141 cannot recognize internally generated genetic improvement, companies can provide extra disclosure to explain this enhancement and give stakeholders a clearer view of long-term value. This means that although the standard does not allow such as intangible improvements to be recorded as asset, companies can still inform users by describing their breeding efforts, research activity, and expected future benefit, and ensuring stakeholders understand the value that is not reflected in the financial statement. And lastly, reduce earning volatility by improving presentation and classification. To reduce the volatility caused by MFRS 141's immediate fair value recognition, companies can present realized and unrealized gain separate so users can clearly distinguish true operating result from valuation changes. This means that by separating harvest or sales profits from fair value adjustment due to growth or market price movement, companies can provide clearer, more transparent reporting that helps stakeholders understand performance more accurately without changing the rules of MFRS 141. Reflective statement on what our team members have learned from this comprehensive case. Overall, our team conclude that the MFRS 141 case study significantly depend our understanding of agriculture accounting by revealing the complexities of fair value measurement, the importance of professional judgment, and the need of transparency in reporting biological assets. This means that through analyzing the case, our team realized that MFRS 141 goes beyond theory and require careful interpretation, ethical judgment, and clear communication, which ultimately strengthen our teamwork, improve our confidence, and broaden our perspective on how challenging yet meaningful the standard is in practice.